Welcome to the weekly recap, brought to you by themortgagereel.com for the week ending March the 6th. A lot of high impact information, pen and paper ready. Let's dive into it. Monday through Wednesday of this week, really didn't see a whole lot of news and activity. Interest rates remained very flat. Coming into yesterday, Thursday, rumors of the unemployment report disturbed the market. We saw the Dow Jones slide by 280 plus points. Then with the official announcement coming out today, really didn't assume too much more. Dow Jones actually closed positive ground at 32 points or more. Now, how did this impact the mortgage world? Unemployment rates at 25-year highs. The Dow Jones Industrial down by over 55% since 2007, closing this week solidly below 7,000. How does this really transferring to the mortgage world? We want to make clear of one thing: the floor and the ceiling. What we've been talking about as far as interest rates, of how high will they go and how low will they go. Very clearly understand one thing, that the Fed's initiative is working. Something from government is showing signs of proof of working. The Federal Reserve, with the billions of dollars, being $700 total billion that they're putting out there to secure mortgage-backed securities to keep interest rates low, is in effect. We're now seeing the buyers on the market, the buying side coming in, the selling side coming in at equal levels of pressure. We want to give you a simple analogy that we wrote up on themortgagereel.com, is how low interest rates will go. If you're a producer of a product in today's market and you know you have guaranteed buyers for your product, are you going to market for sale on day one? Most likely not. Will you ever put it on sale knowing that you have a guaranteed buy that you can make money from and they're not even going to complain about the pricing? Most likely not. So this is the same analogy you could put forth with what's going on with the Federal Reserve and what's going on with mortgage-backed securities. The supply and demand is meeting an equilibrium, therefore creating this pattern of low rates. We got demolished as far as an economy with this unemployment rate at historical highs. Dow Jones sold off. Now a lot of nervousness in the total global markets about where the United States is going. People that anticipated interest rates to fall even further, we have to ask everyone that's putting this out there, that's almost like a false hope that we're giving the public right now. Why would interest rates go any lower when we've had the most impactful economic data come out that didn't even shake interest rates? Yeah, they went below 5%, but here it is again. That ceiling and floor, the 4.75 to the 5.375%, is clearly being outlined. Now, that is very upfront news that you have to keep in mind of when you're determining whether you're going to buy or refinance. And if you're hoping for that 4.5%, we're going to have to be the devil's advocate here. Let's really hope that that economic data coming within the next 6 months isn't going to crush the markets even more than it is today and really drive us down to where we're at the bottoms of the barrel, because that potentially can lead us into a whole nother type of economic downturn. So on the positive side of this, let's look at what's happening with loan modifications. We want to make for certain that people understand that loan modifications don't necessarily honor you today's interest rates at 4.75 to 5.375%. What does it really do for you? Well, they take your income, they take your savings, what you can afford, they look at all your expenses, they figure out where you're at, and they say, okay, we understand you're on interest only at 100% financing. We'll give you this payment at principal and interest, take it or leave it. Now, what does that mean? Your interest rate could be 6%, could be 5.75%, it could be 7%. It's really not getting down to where the open market is, because that is totally against all business sense. They would be doing loan modifications for people who are getting the 4.75%, that have the good credit, that have the income, that have everything that can qualify, and now there'd be no reason. Everyone would default and do a loan modification. Not going to happen. The third thing we really want to put out there is the 105% just came into news in the mortgage world. It's just coming out. Now you can do 105% loan to value. So all of the people who have seen negative equity because of the downturn in real estate values, and all of a sudden they're upside down in the house, you now have the opportunity to refinance up to 105% loan to value, but there are a lot of rules that you have to qualify for. You have to know whether your loan is currently being serviced by a Fannie Mae loan or a Freddie Mac loan. You have to know the difference. We will have both the links on the website posted, so you can go in, simple type in, you put your information in, it will email your response whether your loan is being serviced through Fannie or Freddie. Very important to know. Now, last piece, continually we're committed to education on themortgagereel.com for our potential clients, for our past clients, everyone viewing this on the World Wide Web. If your loan originator that you're currently working with does not understand these types of issues and impactful news on how it's impacting underwriting, interest rates, we want to forewarn you. These are the times where you need to be working with a professional who is keeping up to speed with the market. Should they not keep up to speed, it will cause you grief and it will cause you a lot of wasted time. And at the end, a lot of frustration. And in this type of market, who needs the grief and the frustration, honestly? We want to make sure if you have questions, please, we urge you to ask us, email us in. We get back to you right away. And we're not looking to steal business from any other companies. We just want to make sure that this is the platform where people come to get the right education and understand what's impacting their most valued investment, their home. It is the largest investment that we all make in any type of situation. Real estate is still the biggest price tag out there. And with that, we want to make sure you're making an educated decision. So with all of our commitment that we have at the Mortgage Real team, thank you very much for tuning in week after week. And please, if you find this information valuable, please spread the word as our database, our fan base is growing continually. We thank all of you out there for helping us spread that word because, again, our commitment is going back to the current and future homeowners and making sure that this is one of the key pieces that will return our country to the land of prosperity. It starts with the real estate side, it starts with lending, and then from lending it goes to Wall Street. From Wall Street it expands to the Dow Jones Industrial. The health of our economy. From the health of our economy comes global investments. Come global investments is the return of the total economy. Does it all stem from real estate? Who knows? That's the magic answer right now, isn't it? Well, what we do know is it does make a difference for confidence here in the United States. For unemployment, it makes differences all across the board. Whether it's directly tied to it or not, it does make a difference. We're committed to being part of that difference to make that change. Thank you very much for tuning in. Please tune in next week. We're going to have a lot of great postings on what's upcoming and what's going to impact your most valued investment, your home. Thank you.